Let's focus on Kirloskar Ferrous. The company's operations of one of its mini blast furnaces at Hiriyur plant were temporarily suspended due to market conditions. To get the update on that, as well as what kind of volume hit is going to be there, we have with us Mr. Gumaste, the managing director of the company. Hi, Mr. Gumaste. Good to see you. Well, a little bit of a dampener in terms of news. Looks like demand is not as strong as earlier estimated, but it's for your pig iron operations. So give us a few numbers. Because of this, what could the volume hit be, if you could quantify it, for FY25 as well as FY24, point number one? And also, what would your revised targets be now for the pig iron business in terms of volumes?
Thank you very much for calling me on this show. It's a pleasure always talking to you. And we had great run for many years, and with very little headwinds. So most of the time, tailwind always helping our business. And right now we have a little bit headwind, and margins are terribly under pressure. And our tail end realizations have gone below the variable cost, and we can't run all the three furnaces. And so we have taken a decision to shut down the Hiriyur blast furnace temporarily, and it could be as short as 5 weeks, and it could be going to 3-4 months as well. So hope that things should improve. But right now, I think the most important trigger was allowing export of iron ore from India, and it has increased the iron ore prices by almost 50%. And that's a huge impact on us, because we consume 1.6 to 1.7 ton of iron ore per ton of hot metal. And it has impacted us. And whereas the commodity pig iron prices have come down almost 6,000 rupees now compared to 1 year back. And the combination effect, we have no margins for the tail end. And I expect it should have very marginal impact, maybe 20,000 ton less sales in this year. We were looking for 5.3, 5.4 lakh metric ton of pig iron sales. It may go to 5.1. Whereas next year, our total available hot metal will be 6.6 lakh ton. If we merge ISMT into KFIL, then it will become internal consumption, no more is sales. But we will be able to sell, including internal transfer, 6.5 lakh tons of pig iron. And out of that, about 1 lakh is internal consumption.
All right. Thanks for clarifying there. Just one point. You said that you would either you would shut this plant for as little as 5 weeks and as long as 3 to 4 months. And the reasons why you said was because, one, iron ore prices were higher, and on the other hand, pig iron prices were down by 6,000 rupees over the last 1 year. So that caused you a bit of a double whammy. At what realizations will you restart the plant? I mean, what would be the conditions that would decide whether you start the plant in, say, 5 weeks or 3 to 4 months? Could you give us a sense?
I think two important things. Most of the miners complete their quota of annual mining in 10 to 11 months. And month of February and March, hardly any licenses left out to mine. And that also reduces the availability of iron ore and increases the price. And we are facing that problem. And I'm also hopeful that something will happen to the export of iron ore, and we must get that relief. Otherwise, the export level of iron ore prices and imported coal, it's very difficult for iron and steel industry to survive. And currently, the prices of entire iron and steel spectrum is one of the lowest. It has gone few years back. From the peak of 65,000 rupees per ton of pig iron, we have gone to 38,000 rupees per ton, whereas the raw materials have not gone that down, rather they have gone up. So it's but having said that, we are definitely have currently the huge problem, but I am quite optimistic that the growth journey continues. I think I am talking to all the customers. They are optimistic that 5 to 6% growth will come even coming years.
All right. Mr. Gumaste, just to clarify, 20,000 tons of pig iron volumes will be hit in FY24 and 25. For this year, you landed 5.1 lakh tons. For next year, you'll be doing around 6.5 lakh tons, but that includes around 1 lakh tons of internal sales, correct?
Yes.
Let's get the next
but we
number
will
then.
have growth in the sales, maybe 10% even compared to this year, next year.
Okay, all right,
In
got it.
spite of the internal transfer.
Got it. All right. Yeah, that's mathematically correct. All right. What about casting volumes?
See,
Over
casting
there,
volumes,
you were guiding for much better things, sir. But in this year, year to date, the volumes are still lower. So what is the casting volumes you'll end this year as well as the next year?
a lot of inventory corrections are happening in the tractor industry side. One is the tractor inventory adjustments as well as the raw material casting inventory adjustments. So because of that, though the tractor production, the tractor sales volumes might not have dropped that much, but actual production numbers are much lower. So we have been hit almost like 30% on the offtake of casting related to the tractor industry, which amounts to, we have about 30 to 35% of the business coming from tractor industry. So I have an effect of almost 10%. We have improved, we have added new parts, we have improved the share of business, but volume is impacted. We are optimistic that we can at least reach last year figures, but it is looking, we may end up 5 to 6% lower than last year. But as you know, we have a phenomenal engagement with all of our customers. Lot of items.
Give us the volume number, sir. Give us the volume number, please, of the casting business. 5 to 6%.
Yes, absolutely. I think I still look forward to more than 150,000 for the next year.
150,000. Got
And from a cost standpoint, there are two things that you were doing. One was the fact that you had this pulverized cold injection plant, which will be commissioned from the fourth quarter. So just wanted to know how much that would save your costs. And secondly, captive iron ore. What's the progress there? Because I remember there were two of them, and there is some sort of issue there.
Nigel, I have to only make one announcement as early as possible that we started the mine. It's one announcement, 1 point.
Oh, very good.
See, because we are not yet ready. There are a couple of more approvals required from the government before we really start iron ore mining and transportation of iron ore. So we are working on that. I'm still optimistic and hopeful that we'll finish remaining steps in this year itself and start the mine in this year itself. That's one thing. And with respect to the cost saving projects, we are commissioning the coal injection, pulverized coal injection right now. I think we will get an cost advantage of about 3 crores per month. And by June, July, we will commission the oxygen enrichment that will double the benefit from pulverized coal injection.
Just very quickly, since you mentioned that Bharat mine, I think will start production, soon, and then next year you'll get the benefit. So at peak, what will it be? Earlier we were working with 2 mines. Now I think out of this mine you'll get close to around 2.5 lakh tons approximately. So what will the savings be? So very quickly, quantum you will get from the Bharat mine, the iron ore mine, as well as the savings.
Expect a cost saving of about 50 crores per annum at 2,40,000 tons of mining, and the quantity would be 2,40,000 with the enhanced mining capacity from 1,20,000 today.
Got it. All right, Mr. Gumaste, we're a little short on time, but you've given us a fair sense about business. In the near term, there are some headwinds. No two ways about that. The tractor industry is going through a bit of a slowdown. That's what's impacting you. And on the pig iron business as well, now you'll do around 5.1 lakh tons in comparison to around 5.3 lakh that earlier envisaged. But for next year, casting business could do 1.5 lakh tons. That's something we'll track very, very closely. Always a pleasure speaking to you. For the time being, slip into a short break, come back. We'll continue to focus on markets.